Back with you on the Market Day Report. I'm Marlon Bowling with you. Thank you so much for joining us here on a Monday as we get this new week started out. I wanted to take a look at our market calendar to show you what we've been talking about here with some things traders are focusing on today. Well, as we pull up the first item, we're going to jump to the 9th, and that will be on Wednesday. A lot of eyes looking forward to the crop production report, also the USDA supply and demand report. Some refer to that as the WASDE report. They come out at 11 o'clock in the morning, Central Standard Time on Wednesday. So some analysts have been pointing to those reports, saying that the trade is kind of quieting down in advance of those, kind of heading for the sidelines just to get prepared. Also, coming up on the 15th, remember, we'll have the NOPA Crust report being released, and then the next major report will be coming up on the 18th. That'll be on a Friday. That will be our monthly cattle on feed report. By the way, the cold storage report this month comes out on the 22nd. Let's go to the trading floor in Chicago and welcome OliverSloup of iiTrader to talk about today's market activity here so far. And as we get rolling on this election week, well, on a Monday, everything seemed pretty quiet on the grain side. A little weakness in the corn, even though we had some pretty good overnight export sales reported here. Oliver?
Yeah, it is. It's going to be a very big week, as you had mentioned. We have the WASDE on Wednesday, but a lot of folks really watching for the election tomorrow. That's going to play a key role. We saw the market already jumping around the outside markets. The S&P up about 1.5% on the news from the FBI last night. So a lot of volatility. We talk about volatility a lot and how it invites more volatility into the markets, and I wouldn't be surprised to see that play out throughout this week. Now, we're seeing corn consolidate. We've really been in consolidation mode since last Wednesday and tightening up on those trading ranges that we often look at. 345 is the bottom end of the range. We like the grains down here on the buy side, but we need to get out above technical resistance. We're looking at 350 3/4. If we can get back out above there, I wouldn't be surprised to see us go test the top end of the range near that 360 level. It'll be a very key report on Wednesday. That's going to have a big influence, but those are levels we're looking at for that corn contract.
All right, let's take a look at our current corn prices once again and get everybody up to speed on what the futures are doing right now. Still 1 3/4 lower on December corn. That puts it at 347 even per bushel. March is up, down 1 3/4 as well at 355 3/4. As I mentioned, we had a sale announced of corn overnight. Didn't seem to really help the market much at all. Also, we had a sale of soybeans and soy meal announced overnight. Is it helping the soy meal trade and the soybean trade? Well, yes, it has been, at least in the early going. Let's take a look. Soybeans are up 9 on January. They're priced at 9.99 3/4 per bushel. March is up 9 at 10.06 1/4 per bushel. If you look at the soy meal trade, here you have the January contract up 360 right now at 314.40 per ton. Soy oil, can it join the party or not? Well, the answer is a little bit. December soy oil up 7 points, January up 7 at 35.05. On the wheat trade in Chicago, December wheat, we have it trading 2 lower. 412 1/4 is the last trade per bushel. Kansas City wheat on December is now trading at 410 1/4. That's down 1 1/4 per bushel. And Minneapolis spring wheat trade has December at 507 1/2, down 2 3/4 per bushel. Oliver, why the weakness in this wheat trade here today when the soybeans are surging ahead?
Well, I think corn and wheat are definitely kind of trading in tandem. And really, we've just been in the same story, kind of consolidating, forming a wedge, which basically means we're making lower highs but higher lows. That typically means that we could potentially break out or break down in the near future, and I wouldn't be surprised to see that happen this week with that report on Wednesday. The key levels we're looking at on the support side, 405 1/2. That's the 50-day moving average. That's been a key line in the sand for us for a while. On the top side, we've got a little bit more ground to work up. We need to get out above that 420 level. If we're able to do that, I wouldn't be surprised to see some more upward momentum. Now, I've been wanting to see this for a long time, waiting for the funds to cover, but there really haven't been in any hurry to do so. But they did buy back about 9,000 contracts last week, according to Commitment to Traders, but they're still short about 131,000 contracts. So if we are able to get some fundamental data to support prices and get back above technical resistance, I wouldn't be surprised to see them cover a few more of their shorts to round out this week's trade.
All right, let's take a peek at our cotton market as we head into the break on December cotton right now. It's currently trading 13 points higher at 68.66 cents per pound. We were over 69 cents earlier. Oliver will bring you back here in a moment. We'll examine our livestock trade when we come back right after this. Well, we're talking with OliverSloup of iiTrader in Chicago. He's there at the edge of the CME Group trading floor. And I want to talk about some of the outside markets. Oliver, earlier you alluded to the fact that there was a big rally in the value of the U.S. dollar here today. That market had been struggling recently. But you were referring to the fact that FBI announcement was it yesterday or last night, seemed to take the heat off of the email investigation. Then the market seemed to be surging now in response to that. Is that the opinion most traders are taking this morning?
Yeah, it absolutely is. The outside markets tend to favor Hillary Clinton as president because they see more stability. They think they know what they're getting. So we saw the S&P, crude oil, a bunch of other outside markets, global markets gap higher, and we're seeing that carry out through today's session. The safe haven assets, gold and silver, taking a beating with that stronger dollar. I think that stronger dollar is playing a little bit of a role into the weakness in the ag markets, but it'll be interesting to see because it will be volatile this week. There's no doubt about it. And will that volatility spill over into the ag markets, grains, cattle, hogs? Time will tell. It just depends how crazy things get, but I imagine things will get halfway crazy around here with tomorrow and then Wednesday's WASDE report. Okay,
boy, there's going to be a lot of stuff all at one time this week. On the U.S. dollar index futures here, we can take a look at what December is doing right now. At one point, it was over 900 points higher, I believe. Well, I guess it was over 700 points higher. Right now, we're showing December up 770 at 97.860. So still very strong nonetheless. The crude oil market had been higher this morning. Let's check it. We have December West Texas crude still 7 cents higher at 44.14 per barrel. Okay, now to the cattle trade. We closed weaker on Friday, and we're seeing a little bit of follow-through selling here early, apparently, here, Oliver. It looks like December live cattle down 9 at 102.63 per hundredweight. February down 52 at 103.78 per hundredweight. That is about a $0.50 off our low of the day, about that much from our high as well. Feeder cattle trade, we'll switch over there. We have January now down 30 at 117.55 per hundredweight. March down 53. Can you read much into this? I mean, we are weaker on apparent follow-through selling, even though we did actually open a little bit higher this morning.
Yeah, I think a lot of this is just carryover from Friday's trade, that weaker close. And we really failed to get out above technical levels on both the live cattle and feeder cattle. 105 was the level we wanted to see consecutive closes above. We weren't able to do that. And so the buyer stepped aside and the seller stepped right in. And we're seeing that carry over into this early morning trade. Obviously, a lot of time left throughout today and the week with a lot of fundamental headlines sure to come. But we need to hold that 100 level. If we're able to do that, I think this market is starting to stabilize a little bit, but that 100 level even is going to be very pivotal on a closing basis. If that manages to hold, I think you could see some buyers step back in. We are starting to make higher highs if you look back over the last month, which is nice to see, but we need to mark higher lows before we can get some more confirmation of a near-term bottom.
And speaking of stabilizing on the lean hog trade, we had been trading firmer this morning. Right now in the lean hogs, we have that December contract still 63 higher at 46.78 per hundredweight. February up 52. Oliver, thanks. Appreciate it very much. Good luck on the trading today. OliverSloup with iiTrader in Chicago. That's the latest from Chicago.
All right. Thank you, markets editor Marlon Bowling. And of course, we always thank him as well.